Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. A lot of you guys that are watching me, you guys are sheep style traders. What's a sheep style trader? It means we trade based on the price action. We don't care if the market goes up. We don't care if the market goes down. We just follow the price action. That means we know the levels, know the setups beforehand, and then we trade it in real time based on what the charts are showing us. Based on what the charts are showing us. You guys are master traders, masters of following the price action, masters of managing your risk, masters of not allowing the market makers to trick us out. We trade with the traps here on Uncle Charles' YouTube channel. And guys, I always say to trade with the traps. I always say do not call a bottom. Do not call a top. Instead, here at Uncle Charles' YouTube channel, we watch out for the process. We keep our eyes on the process. Because when there is a bottom, there is usually a false breakdown setup that starts us off. And when there is a top, it usually starts with the false breakout setups. A lot of you guys already knew that. And if you knew that, in my book, you are a master trader. You are a master trader. I don't care what the past says. The best days are still ahead of us. Your best trading days are still ahead of you. And they're coming very, very soon here in 2025. Because look at what happened, guys. I don't know if it was the fear from the tariffs. I don't know what was the catalyst, guys. There's a lot of stuff going on. Emotions are high all over the country. And as a trader, as heartless as this sounds, but as a trader, this is a good thing for us. When there is emotions running high, then there is volatility. And as traders, we need some movement. We need some volatility. Okay, you got to be a little cold-hearted with these things, right? And what happened? Look at this, guys. Uncle gave you guys the 609 level, right? I gave you guys the 609 level. I gave you guys the 607 level. I gave you guys that 605 level. It broke it all down, started in the afternoon train. The morning train was a bit choppy. We questioned in the last YouTube video. In my last YouTube video, can SPY get back to all-time high? It kind of did. It kind of went to all-time high. It just couldn't set new all-time highs. As a matter of fact, we bounced off that 607 level. We cleared 609. We got to about 610 before we started getting weak here. We broke down 609. Market tried to recover, and it broke down again, giving us this beautiful M pattern. A beautiful, beautiful M pattern. Broke down 609. Broke down 607, giving us the false breakout setup that led to this amazing move to the downside. It started off with the false breakout, guys. Bottoms start with false breakdowns. Tops start with false breakouts. That's what I want us to see. This gives the market a little bit more, make it more predictable. So all the people that love to predict the market, these are the type of things you want to learn. You want to learn the patterns of the market. You want to learn the tendencies of the market, because there's only so many things the market can do before you realize you've seen it all. Because you are a master trader and you've seen it all. And you've seen this before. Double top. Potential M pattern here playing out. If this plays out, guys, this could be a nasty move to the downside. I'm trying to look to the top here. What would be the reasons for the market makers to push the market up top? Well, I mean, last week, earlier this week, we had a gap. We had some areas of imbalances. Some call it the fair value gaps. We had an actual gap. Well, guess what? The fair value gaps, the actual gap, all got filled. Any reason for the market makers to push it up, they already rectified it. But I still see reasons why the market should head down lower. We have fair value gaps over here. We have a big old gap over here from mid-January. So what levels must break down? I mean, is there fear in the market with the tariffs? Absolutely. If the market is fearful, what can happen? The market pushes downwards. Or it could have been an overreaction. It could have been an overreaction. You see, I can't give you a for 100% theory that'll work. Oh, the market's going to go down or the market's going to go up. But what I can do is identify the bull case and the bear case and the reasonings. It's on us to react, right? If we break down, like we recaptured that 5 daily moving average, we broke it back down. That's technically a false breakout. And then if you see the 15-minute time frame, you guys see the trappiness that they did to the bulls. If there is follow through, and if this is an M pattern playing out, 602 and 600 must fail. All right, that's the fib level, critical fib level. We recently recaptured last Tuesday, retested it multiple times as support. If it's lost, guess what, guys? We are heading down lower. If we get a gap down, if this opens up with a gap down, there's a big chance that fear is taking over the market. And if it's fear, it's gonna be pushing us downwards. And it'll start with false breakout setups. I show it to you guys what the false breakout look like on the 15-minute time frame. It's the same principle on the daily chart. We want to see levels that were cleared lost. And that is the price action saying to us, hey, traders, master traders, we are heading down lower. We lose 602, we lose 600, or we gap below those levels. There's a big chance we are going to head down lower. Fear of the terrorists. I don't know. Is that what it is? Is that what it is? But if this is an overreaction, because we've seen it before. Remember back in January 24th when we gapped down to the 27th, a lot of people got trapped. A lot of bears got trapped when the market gave us a bounce back to all-time high-ish. We got to be careful that it's not an overreaction. And we'll know it's a potential overreaction when the levels that we lost on Friday gets recaptured either Monday or Tuesday. All right, what levels do I have? What levels do I have? I have 602 that we lost. I have 603.5 that we lost. 605, 607, 609, guys. We got to recapture those lost levels. Get it on a 15-minute time frame, right? Let me move this. Get it on a 15-minute time frame. Find your levels, right? If we recapture 602, you go long. You go long. 602, bomb, or something like that. It'll be something like that. And then you can work on your target. You can bring it up to 605. Set your stop loss below, down right here, below 602, something like that, okay? It'll be something like that. But you got to trade looking at the charts. Otherwise, you're heading into this battle zone blind. You got to have the charts so you can see for yourself when the levels get recaptured. I have 600, 602, 603.5, 605. If we can recapture those levels, you want to go long. You want to go long. Otherwise, we lose 602 and we lose 600, I'm going to be bearish, okay? Below the 5 daily moving average, I am going to be bearish. I'm going to be bear bias. I'm going to be leaning bearish. And above the 5 daily moving average, I'm going to lean bullish. So make sure you guys get yourself a simple moving, the MA, just a regular moving average on the daily chart, 5 days, and watch. If the market's below it, there's a good chance we're heading down lower. If the market's above it, there's a good chance we can go for a bounce. Triple Q filled the gap. I don't see any. Actually, we do have an area of imbalance between 534 to 535. But that big gap that we had from January 24th to the 27th, it's filled. There's a good chance, okay, based on if the market's going to be able to take out that 5 daily moving average, which is around, well, I do have support at 522, and then the 5 daily moving average is around 520.4-ish. It could slope up a little higher when it opens tomorrow, but just watch it. If we can break down those levels, get back below the 5 daily moving average, even gapping below it, would be very bearish. Next support's at 519, 517, and then 515. We break down those levels, we are heading up higher. Trust no longs, no calls unless we get back above 524, okay? 524 is a fib level, so we'll need to clear that level to trigger longs, okay? The RSI is not overbought or oversold, so Triple Q has some energy to pick its direction. And if it's above 524 and 526, there's a good chance we are heading up higher, all right? And we break down 522 and 520.5 below the 5 DMA, I would lean bearish. Tesla. Tesla tried to go for a bounce. I mean, it technically closed a little higher than the previous day, but intraday there was a lot of selling pressure and some buying pressure. This is a very volatile stock, and if it's going to bounce 405 and 406.5 must clear. I would be bull bias above 406.5. It tried to clear it, but it failed on the daily chart. But if it does, I would be bullish. 410, 414, and 417 plus would be my targets. Play it level to level and try and swing the runners with a proper stop loss. If your runners get stopped out, so what? You still made money on the day, okay? Don't let greed take over, guys. Support is at 403, 401.5, and 400. Those levels fail. 398 or low in play. Below 398 is a loss of a fib level and below the 5 daily moving average. So that is where I would draw the line between being bullish, okay? Because if we lose that level, we lose that moving average, I'm going to switch back to bearish, okay? NVDA, I had a meeting with the president, Donald Trump. You guys see that bearish candle? It didn't help him that much, okay? We actually lost some critical support levels, which was around 122, okay? Like we lost 122. That was the last fib level we lost. So as long as below it, I'm bearish. Loss of 119, 117, and 115.7 would be the next setup to look for if you're a bear. You want to see those levels break down, we could definitely head down lower. Bulls, I mean, y'all see this like this gap down, and it's like building an island. Bulls really need a gap up. They need some catalyst. They need some good news. I mean, a lot of people thought maybe the meeting with the president was going to help them out. It didn't help them out. But if it's going to be bullish, you know, multiple levels must recapture. 122, we lost that. 124, 125.5, 127. And I cannot favor a bottom is in unless we get above 129. All right. IWM, we lost the breakout of that downtrend line, guys. That's a false breakout. Bearish follow through would be to break down 226.4 and 225. We lose those levels with this false breakout setup. I'd be a lot more bearish. I feel a little more braver shorting based on this context. The breakout will not be canceled. Breakdown, excuse me, the false breakout or the breakdown. It will not be canceled unless it can get back above 228 and clear 230. All right, gotta clear those levels for me to be bullish. Otherwise, it's kind of looking bearish right now, and loss of 226.4, 225 will be the nail, the hammer on the nail. Apple, big, well, wow, what a rejection. We had that big old gap up. Looked like it was for nothing though, because it just pushed it right down. That's the big money. I'm pretty sure those are elephants that did that. And if they're taking profits, and maybe there's more downside than coming. Maybe. But it will tell me for sure if support at 236, 234 can fail. Those levels fail, guys. 230, 228.4 are lowers incoming. I'm trusting no bounce unless Apple can get back above 237 and 240. Then maybe I'll trust the bounce. And even then, it's a maybe. They're going to need a miracle. Like big push up. But the start, need to get above 237 and 240 for me to even consider going long. Amazon, not too bad. It still managed to get back above that 237 level. Okay, that's the equilibrium level for tomorrow. Above it, bulls have a shot at more upside. Clearing 240 and 241.5 would definitely be bullish. But below 237, yeah, it's going to be questionable. Below 237, puts 235 and 233 in play. Below 233, I would definitely be bear bias and favor a lot more downside for Amazon. Microsoft looked bearish to me. If it wants to put in the bounce, 417, 418.8, and 420 all must recapture to put 425 in play. And above 425, I would favor a bottom. But right now, it's looking bearish. Breaking down 415 and 413 will put 410 or lower in play. And below 410 would definitely give us some lower lows. But it's looking bearish for right now. I'm willing to change if the price action tells me so. Meta has an inside candle setup. Is it finally going to pull back because it's been killing the bears lately? If the answer is yes for a pullback, it's going to have to break down some support levels, okay? 687, 684.3 are the two levels to watch. Break down those levels, 680, 674.5. Maybe all the way down to 670 would be nice and possible. But if we clear 690, then 695, 696.8, and 400 would all be back in play for Meta. And here's the DXY looking like went for a bounce. It's going for a bounce. So if putting that, I mean, remember I told you guys it had that breakdown of the neckline from the head and shoulder, and we recaptured it on Thursday. It's showing a bit of follow through on Friday, so I can't get, based on that setup, I can't get bearish on DXY unless it break back below the neckline, which would need the price to get back below 108. Okay, so below 108 I'd be bearish, but as long as above, guys, is a good chance it's bullish and we head up higher. And if DXY is bullish, it tends to inverse the SPY. A bullish DXY could be a bearish SPY. A bearish DXY could be a bullish SPY. So make sure you use it and be unbiased about it. Coin. It managed to retest that 5 daily moving average as a support and stayed above it. It's around 288.6. Okay, so I have support at 290 and 288.6. Both those levels must fail for Uncle Charters to be bearish on coin. I'll favor some downside. Okay, 285, 283.5, 280 or lower, back to the 270s. Definitely be possible. Watch out for that M pattern. But it'll start with the breakdown of 290 and 288.5. Otherwise, if we bounce, I have resistance at 292, 294, and 296. Those levels clear. Back to 300 and 305 plus would definitely be a possibility, okay? Doge is looking bearish. Trust no bounce unless 30 cents and 30 cents. Just no bounce unless 30 cents and 32 cents can recapture. If they do, I would go long. But right now it's looking bearish below 30 cents. Next support's at 28 cents. And if it's lost, whoo, most likely going down to 26.5 cents or maybe lower. All right, trust no longs unless we get above 30 cents and 32 cents. And a Bitcoin lost 100K. We lost it. Let's see how much lower it can pull back. Next support's at 98K. 98K fails. 95.8 and 94K incoming. All right, trust no buy unless 100K recapture. I need to see it back above 100K. Otherwise, it's looking like it's in pullback mode. All right, master traders, all my fellow sheets, thank you guys so much for watching. Uncle loves you guys. Let's kick some ass, some market makers' ass this week. Peace.